much for this very warm welcome. Respected Vice Chancellor, members of the faculty, distinguished guests, including my colleagues from the RBI, distinguished members of the press, and of course, dear students. It gives me great pleasure to be here. As I was coming here, I wondered what I would speak on. And I thought perhaps the bulk of the interaction should be to take questions from you and try and respond to them as best as I can. But I thought I'd start by giving you a sense of what I think is going on in India, how the world sees India, as well as what the role of the RBI is in all this. I've just come back from the International Monetary Fund World Bank meetings in Lima, Peru. It's a long way there, but I think the general mood in Peru is that the world economy is still in a very slow recovery from the Great Recession. But there are a few bright spots, and the world sees India as a bright spot. Now, that's probably because we're growing faster than almost any other country in the world. But I would say that we're still in the midst of a slow recovery. We are getting better every quarter, but we still are not where we should be in terms of our growth potential. And we need to work hard to make that happen. Now, when people ask me, why did India slow down so much? I think there are 2 or 3 reasons why we slowed down and why we are going back to recovery now. The most immediate reason, of course, is the world slowdown. And we are a very open economy, though people don't realize that. We import a lot, we export a lot, and a lot of our industries depend on the outside world for activity, at least at the margin. And so for that reason, when the world slowed down, it also subtracted from Indian growth. But there are 2 other reasons which are more relevant to India. One is that as the world slowed down, we tried to compensate. And we probably compensated a little too hard. We had 3 successive fiscal stimulus packages. For those of you who are not intimately aware of economics, that means we spent more. We spent more in order to try and revive the economy, and spending by the government. So our deficit, central government deficit, went from about 2.5% of GDP to 6.5% of GDP very quickly. Now you can do that for a little while, but you can't do that for a long time, because people start wondering, if you're spending so much, are you able to manage your budget down the line? So that was one. We started spending more. Monetary policy also became very, very accommodative. We cut interest rates substantially, even though inflation, CPI inflation, was quite high. So with all the stimulus, it turned out we were quickly running beyond the potential pace that the economy could handle. And that showed up in a number of ways. It showed up in a much larger fiscal deficit for the reasons that we just talked about. Government spending a lot, therefore the fiscal deficit increased. But also the current account deficit increased. Think of the current account deficit as the country spending beyond its means. Therefore buying more from the outside world, which has to be financed by the outside world. The current mirror image of the current account deficit is a need for financing from the outside. So we start borrowing more from the outside world. Again, that is unsustainable if you take it at a high pace for a long time. And our current account deficit in 1 quarter reached 6.5%, which was clearly unsustainable. And the third aspect of the unsustainability of this kind of stimulus was that we had very high inflation. For a long time, we looked at WPI inflation, that is wholesale price inflation. But that's not something that consumers see. Consumers see retail inflation, which is the price of goods that they buy in the shop. And retail inflation was growing at close to double digits. So all three indicators suggested we were living beyond our means, that we needed to stabilize the economy, we needed to cut back on the fiscal deficit, we needed to cut back on external spending, we needed to bring down inflation. So that was a second set of developments that happened. A third set of developments, I think, were unique to our growth. We had grown at a tremendous pace between 2002 and 2012, approximately 7-8% a year. With that kind of growth, you quickly reach the limits of your institutional capacity to manage growth. What do I mean by that? I mean that when we started growth, land acquisition wasn't that big of a problem. There was enough land still to be acquired for our roads and factories and so on. Also resources. There was a time in the 90s when spectrum was easily available. In fact, a number of resources, mineral resources, were given away on a first-come, first-served basis. Nobody wanted iron ore. There was so much iron ore in the country, it was a problem digging it out of the ground. So it was sort of first-come, first-served basis in certain states. But as growth picked up and as China also grew and demand for resources became stronger, many of these resources became very, very lucrative. Iron ore prices went through the roof, which is why we had a lot of illegal mining in India. And the problem was we didn't have appropriate ways of controlling these kinds of resources and allocating them properly. It was no longer feasible to hand it out on a first-come, first-served basis. You needed a more transparent system. It couldn't be handed out on nomination basis to people you knew, because you were giving them a huge windfall by doing that. So to do it, you had to do it transparently. You needed to bring in auctions. You needed to bring in, like we have auctions of spectrum. But it took a few scandals, a few situations unearthed by our watchdog institutions like the CAG, CBC, Supreme Court, to see that we needed to change. We needed to build the institutions that would allow us to grow in a sustainable way. Now, it's not just institutions for allocating resources. We also needed institutions for managing the environment. For example, forests were getting despoiled because a lot of our natural resources are in the forests, coal, minerals, and so on. How do we protect the forests while at the same time allowing economic growth? So we needed acts which would try and draw the balance. Sometimes the acts went too far in protecting but not allowing development. Sometimes the acts needed to be strengthened because they allowed too much development at the expense of the environment, at the expense of tribals, at the expense of weaker sections of society. So we needed institutional development to allocate resources, to manage the environment, to create a fair sense of outcomes in society as we grow. And we're working on it. It's work in progress. As you know, for example, the land acquisition bill there was a bill which was passed by Parliament. Now there's a sense that perhaps it's a little too difficult for development given the original bill, so it needs to be amended. There's a debate in Parliament, but that's part of the process of institutional progress. But if you put these three things together, world slowed down, we had too much stimulus and had to pull back on the stimulus so as to manage our macroeconomic environment, and our institutions were not adequate to the growth, therefore they had to be revisited and developed to become more adequate for to ensure that we had sustainable growth. All these three combined brought a substantial slowing of the economy. But now we're working on each of these dimensions. We've brought a measure of macro stability back to the economy. Even though the world is still not growing particularly fast, we can now generate more domestic demand within our economy for the goods and services that are produced, and thereby elevate the growth rate. Of course, it would be far easier if the world was growing, which is why it's taken us so long to turn around and start growing a little faster, because we don't have the support of the world. But now things are slowly starting to happen. And of course, institutional development, which is a slow process, but is also continuously taking place. Today, you won't hear of any natural resource allocated by means other than through auctions, because that is the transparent way of doing it, right? So we are developing on the institutional side. Now, what is RBI's role in all this? Well, clearly we play a role in macro stability, in trying to ensure that the economy is growing within its means. And that means sometimes we have to slow down the economy because it's growing too fast. When demand is growing too fast and the supply of goods is not keeping pace, what happens? One, prices go up, inflation increases. And two, because domestic supply is not enough, you start importing more. And so you have two of the symptoms of an unsustainable economy: high rates of inflation, as well as larger external deficits, because you're buying from the rest of the world, and of course you have to borrow from the rest of the world to finance that. So what the role of a central bank is primarily to modulate the rate of the growth of the economy, to be consistent with its supply potential, right? In other words, growth by itself, which is not able to be supplied adequately by the economy, is not particularly useful, because it comes to an end at some point very quickly. And we need to balance that. So that is what monetary policy does. It tries to keep growth of demand in line with supply. And as a result, inflation comes down, which is by itself a good thing. Well, we do other things. We regulate the financial sector, especially banks. Now, banks can do a variety of things, but we have to make sure that they do it in a way that is reasonable and that doesn't cause stability risks or consumer risks in the economy. We also supervise them. We make sure that the regulations that are passed are in fact adhered to by inspecting the banks, by ensuring that they do what they're supposed to do. Now, you may ask, well, does this mean that you will never have a scam? Does this mean that you will never have bad loans? And does the fact of a scam or the fact of a bad loan means that we're not doing our job? And the answer is no. We can still do our job, and there can still be misgovernance. There can still be somebody who runs riot in a branch somewhere and takes risks they shouldn't be taking, or violates the regulations and does things they shouldn't be doing. We're not omniscient, omnipotent. We don't see everything that happens. But when it happens, we have to move very quickly to clean it up. Similarly, non-performing assets, the bad loans in the banking system, doesn't necessarily reflect a failure of regulation or supervision. It could also be that genuine risks were taken. After, banking is not a risk-free enterprise. You're financing an entrepreneur and hoping that they will succeed, but success is not 100% assured. But our job is to ensure that if risks are taken and the risks don't play out properly, if the loan goes bad because for a variety of reasons, bad luck, bad management, the borrower is not able to deliver, that the bank recognizes the loss quickly, deals with it by trying to help the entrepreneur get his business on track, and if that is not possible, closes down the business so that the resources that are trapped in the business are taken out and put to good use elsewhere, right? That's very important, to redeploy the resources, and the banks are supposed to do that so that they can recover their money also. Our job is to make sure this process works effectively, that the cleanup takes place, disclosure takes place, and that assets are put back on track. Of course, if regulation is extremely lax, supervision is extremely lax, banks may end up taking more risk than they should be taking. That is also a problem that we have to avoid. But within the regulations also, I want to argue, even perfectly good regulations, it is possible for banks to make mistakes, to have loan losses. Doesn't reflect a failure of regulation supervision, maybe necessary risk-taking. Apart from that, one big sort of area that we have to work on is payments. Whenever you use cash to buy something, The cash is supplied to you by the bank. Who supplies the bank cash? We do. So the whole process of printing cash, distributing it, getting it into the hands of the banks, and the banks distributing it to the shops, that's all part of our activity. It's our currency management activity. But also the whole electronic payment system, the credit card that you use, the debit card that you use, for banks when they transfer money to other banks through the real-time gross settlement system, the RTS-GS system. We have a state-of-the-art payment system in India, second to none in the world. And it handles enormous volumes. One of the things about being a country with a large population is almost everything is many times what takes place in other countries. So the payment system is something else that we handle, and because of the volumes in this country, it's quite different from other countries. Two other areas quickly that we develop: financial markets. We regulate the debt markets, especially the government debt markets, and we try to develop it to have a more liquid debt market. We're one of the few developing countries which can issue debt in its own currency and has substantial number of foreign investors in that debt, even at our level of per capita GDP. We've never really gone for large-scale borrowing in foreign currency using government debt. Some other countries have had to do it because nobody trusts their currency. We've had a currency that by and large has been trusted, and increasingly people want to hold our debt. If you read the papers a few days, you would have seen there was an auction for government debt, and it was significantly oversubscribed because they wanted to buy Indian government debt. Similarly, for state government debt, now we've opened it up to foreign investors. There's a lot of desire to buy it. And that reflects an economy which is improving, that reflects some credibility of policies within this economy. And finally, we want to increase financial inclusion. Here, the government, as you know, has a variety of schemes. Most important in recent times is the Pradhan Mantri Jan Dhan Yojana, opening accounts everywhere. Now, our job is to make sure these accounts, in fact, are used. Government wants to funnel benefits through these accounts, but we also need to make sure that there's a facility in a remote village for the villager to take money out, or if the villager makes money, to put the money in to their savings accounts. And I think this is one area where we're going to see enormous change in the next few years. We're going to see a new variety of bank, which doesn't exist almost anywhere else in the world. It's called the payment bank. It's going to be your mobile company or your local banking correspondent becoming a bank where the bank can take in money and give out money. So your kiosk, your mobile kiosk where you can buy a mobile card, is also a place you can put in money into your savings account. You can also transfer money on the mobile from one mobile to another. So if you have a friend that you want to send some money to on his or her birthday, that should be much more possible in a short while, hopefully in the span of a year than was before. So I think there are major changes coming in the financial sector in all these matters. We as a central bank have to try very hard to keep abreast of all these changes and not to stand in the way of change. At the same time, we shouldn't let ourselves be driven by the latest fads, the latest schemes, because they may not turn out to be something in the interests of the consumer and the broader public. To be able to understand the good from the bad, we have to constantly upgrade our skills to become better in terms of what we do, to know what is there to know in the rest of the world, and to take from that and apply it here in the different contexts that we have. So a career in the Reserve Bank is a very interesting one. I hate to say this, but one of the few institutions in the country which still, after 80 years of existence, has a reputation for both capability. People respect the capabilities in the Reserve Bank, as well as integrity. It's a public institution. It is an institution where you feel that you're doing good when you're in it, because you're affecting the lives of people, you're making changes, you're bringing new services to them, you're regulating the system to make sure it works in the public interest. Lots of things you can do. It's a career which can be quite fulfilling. And I think many of you may be thinking of the civil services as an alternative. I would say think of the RBI also, because it's a very interesting place. We have, like many other public institutions, we have an exam, but we've shortened we used to have a more long drawn out system. It's a much more efficient examination process starting this year. So if any of you are graduating, please look at the RBI website and look to careers in the RBI. Now, some of you also asked about internships. We also have an internship program at the RBI, again, which we should have on the website. So feel free to look at that and apply for our internships. We try and give you some problem to look at over the summer, and you know, if you can help us with that, that's wonderful also. Let me stop there and see, perhaps we can take questions. I'd be happy to take questions, but in whatever form or order that you want.